PSU pack. Dipan Mehta now joins us on the show. Dipan, good afternoon. We've been speaking about PSU banks for a bit now. I just want your thoughts on the rail theme, which has come back today. RVNL, of course, has won an order worth nearly 1,500 odd crores, but giving it company today on the way up. We have RITES, IRCON, the entire pack, which is moving up. Your thoughts on, the rail sector after the big rally? We saw a bit of a knock. Do you think this is a good opportunity to re-enter?
Yeah, Mangalam, good afternoon and thank you for having me on your show. I think what we are seeing is a continuation of the rally which we saw earlier in railway stocks and broadly under all PSU stocks, whether they're PSU banks, defense stocks, and even some of the other engineering companies within the PSU space. And that trend, I think, after a correction in the market, has certainly resumed. And this is like a mean reversal to mean type of a trend taking place over here. And this trading rally, I think, has got more legs, has got more strength. And certainly, I think whether it's railway stocks or PSU banks, you could expect another 25-30% appreciation in the first half of the next year itself. And mind you, these companies will report exceptionally good numbers in the December-March quarters and thereabout, considering their order book position and excessive and the spending which is taking place on the railways part. So very bullish on these companies. Of course, they're not as cheap as they were earlier, but still, I think given the stability and earning visibility, you could attribute a slightly higher price to earnings multiple. So some amount of re-rating of PE or price to book also can be anticipated for these railway companies.
Dipan, one of the stocks that you own and you were disappointed with, MapMyIndia. I know we chatted about it earlier, but MapMyIndia today has gone ahead and hit a fresh 52-week low. The stock has slipped close to about 3%, and at 1,066, it's above its issue price, which was 1,030, 1,033 thereabout, but it's still down close to about 36% year to date. So, at a time when we're not far away and we're still making good gains, MapMyIndia is at a fresh 52-week low. Any stocks which have been ranked underperformers in your portfolio this time? MapMyIndia, I'm presuming, is one of them. Any others? And which are the ones that you've lost the faith in and are saying that, oh, my stop loss has been hit now, let's exit?
Well, another company which comes to mind is Intellect Design. And clearly that showed a lot of promise earlier. We like the business model because it's a product company and getting more and more into platforms and offering software as a service. But the numbers have been disappointing the past 2-3 quarters or so. The stock has steeply corrected, as you will see. And although the underlying business fundamentals are good, I think that clearly the company is not living up to its true potential. And we are a bit disappointed with the way the management is, in terms of guiding growth as well as managing the opportunities as well. I think much more can be done given the kind of quality of the products and the track record. So that's one big disappointment along with MapMyIndia. And there will be 1 or 2 more, but I seem to be having a memory lapse over here. That bad news and bad stocks you want to tend to forget, and that's what's happening over here.
To exit Intellect Design arena, or are you going to keep the faith?
Give them a quarter or two, because what's happening over there is that a lot of their order books, which are going to be like on the product side, the clients have moved to software as a service, so you get a lesser billing, but it's more consistent and provides a little bit more earning visibility. So let's just see, wait and watch. Typically, companies like MapMyIndia or Intellect Design or some of the other platform companies, and I'm talking about new age consumer-oriented digital platform companies, but other industry-oriented platform companies, I think you just need to give them a little bit of time, because once they get the scale going, then the operating leverages really kick in very well. And you can then expect 25-30% type of a bottom line growth to come through. But that precise inflection point is very difficult to figure out at this point of time. So I think if you have a 3 to 5 year view and a long-term investor as we are, we like to remain invested. You do keep in mind that these are one of their kind type of companies. There's no other parallel, like whether it's MapMyIndia or Intellect Design or Radiant Technologies or Root Mobile, Panda Solutions. All of these companies are like quite distinct in their space, and just need to give them a little bit of time to get the business model going and reach their full potential.
No, got that. Dipan, Adani, Wilmar, good afternoon. Any thoughts? Third day in a row, 5% circuit every day.
We don't really track the company because it's very expensive compared to its peer group companies and the type of products and business model that it operates in and the kind of margins at which it operates. So I would want to comment on that company. It's just that there are better options when it comes to consumption-oriented stocks, and if you want to play that investment theme, the better way would be to play through entertainment, hospitality, travel, tourism, healthcare. I think those are stronger, longer-term secular trends, more reliable and greater visibility.
Okay, travel is, hotel stocks are doing very well. So EIH, Chalet Hotels, Lemon Tree, these stocks have seen gains of close to about 3 to 4% in today's trade. Dipan, do stay on. We need to slip into a very short break. We'll continue our conversation with you. We'll also invite Rajesh Kothari of AlfAccurate Advisors on the other side.